Japan's July trade report evidenced that the country's economic recovery was dampened by global economic slowdown. While the headline deficit figure was largely in line with market expectations, the steep decline in exports, due both to global economic slowdown and strength in the yen, generated much concern, not only due to the free fall in shipment to Europe, but also because of the accelerated pace of the decline to Asia, especially China. The report suggested that Japan's economic growth would increasingly be reliant on domestic demand, which would unlikely be sufficient to boost the country's GDP growth to a meaningful extent. The report signaled that dismal exports would continue to trim Japan's growth in the third quarter of 2012. Japan posted a trade deficit of 517.4 billion yen in July, following a surplus of 60.3 billion yen in the prior month. This was the first deficit posted in July. Seasonally adjusted, the deficit widened to 326 billion yen from 318 billion yen in June. Both exports and imports contracted in July, but the pace of the former was much faster. In terms of yen, exports were down 8.1% year-on-year and 1.1% month-on-month, while imports gained 2.1% year-on-year but dipped 0.9% month-on-month. The geographical breakdown showed that the contraction continued to be the most severe in Europe, while the situation also deteriorated markedly in Asia. Exports to European Union countries plummeted 21.3% year-on-year, following a 21.3% drop in June and the biggest decline since 2009. Exports to Asia declined 9% in July, doubling that in June. Note that the fall in China accelerated to 11.9% from 7.4% in June. While exports to the United States gained, the size shrank to 4.7% in July, down from 15.1% a month ago. Imports grew from a year ago but contracted on a monthly basis. As Japan has imported more substitute energy since the earthquake in March 2011, oil and liquefied natural gas, as well as their prices, have taken a bigger role in the country's total imports. We expect fuel imports will rise in coming months as world oil prices have been on the rise recently. Moreover, imports of food would also climb higher as the United States drought sent agricultural prices higher. The trade report suggested that Japan's economic growth would increasingly be reliant on domestic demand as global economic outlook continues to moderate, with major economies struggling to expand. Unfortunately, domestic consumption would be unlikely to be sufficient enough to boost the country's GDP growth to a meaningful extent. With the lack of factors that exports would surpass imports in coming months, we expect Japan to continue to report deficits in the coming months. This would lead to a trimming of Japan's growth in the third quarter of 2012.